Hey everyone, Mikayla, Elliott, and Taryn, Wallace, loan officers here at Guild Mortgage, and we're here to talk about Hot Topic Tuesday. And today's topic is mortgage points.
We're going to talk about what, why, and how. So the first thing we're going to talk about is what are mortgage points. So mortgage points are basically a 1% of your loan amount that is contributed towards your interest rate. So what that means is every time you buy down an interest rate, it's a cost of 1 point. So if your loan amount is $300,000, that means 1 point would be $3,000. So that would be the cost associated to you if you were buying down mortgage points. So that's kind of the basis of how they start, and then
why would you use them? So there are different ways to use them in a transaction. Mortgage points can be paid by the seller. They can be paid by the buyer. So there's ways to utilize it. If they're paid by the seller, you can use it to buy down your rate, which is what a lot of people talk about when you hear about rate buy down in points. Or as a buyer, you can pay to buy down your rate. So we talk to clients about the importance of when you're shopping for a mortgage and looking and comparing rates, that you're not looking at oranges to apples and you're looking at apples to apples, where one lender might be charging you a point for a rate. So that maybe their rate's lower, but there's more points added in, so your closing costs are going to be higher.
Yeah.
So that's kind of why they would be utilized in a transaction, is to buy down the rate or make it cheaper out of pocket to get into a house.
And also another reason that you would want to buy down your rate is to lower that monthly payment. So if you need a specific comfortability range of payment, let's say you need your payment to be at $3,500 and that's what you need it to be, but the going interest rate maybe is a little bit higher, increasing that monthly payment, you can buy down the rate for that affordability and comfortability of your payment.
And another hot topic that's going on in the market right now is the temporary buy down. So right now people are utilizing it where the seller actually buys down your rate temporarily for the first year and maybe the second year, so that you have that more comfortable payment early on in your loan. And then the method of that is kind of like if rates then drop like they're projected to, you just refinance and get the lower rate. So you have that comfortable payment for the first year and then hoping for the rates to drop in the next year or so, and then you get that lower payment for the rest of your loan.
Yeah, and I think one thing that a lot of people don't know about that specific program is that it's not an ARM program, so you're not stuck in adjusting, multiple times over that 30-year term. Basically, it only adjusts the first year and then sometimes the second year, and then once you're in that from 3 to 30, your payment will never change. It'll stay the same at that time. So it's not going up and down the whole life of the loan. It's just basically for those first upfront 2 years in savings. So that helps a lot of people because then they are able to get that payment comfortable for the first couple years, stay within their budget, and then once the rates do drop or go down, which is what's projected to happen, they can refinance at that time and get an even lower rate. So
then going on to the third kind of question of how do you utilize them? So like we said earlier, they can be utilized by getting a seller credit, which is also common right now in this market, where the seller will pay for those points. So if you were able to get 2 points in a seller credit, then you can look at maybe utilizing 2 points to buy down the rate or 2 points to go towards closing costs. Yeah. The conversation that I'm having with clients right now is, let's negotiate your offer and figure out kind of what we're able to get from the seller. And then from there, determine how we're going to use it. Because there are so many ways to use points that it really just matters first to figure out what points we're going to get. And then we can utilize them that way.
Yeah, and then also too, how you use them is also going to depend on what you as a buyer are looking for, as far as, are you looking for a lower out-of-pocket expense today? Are you looking for a lower monthly payment? What is really the goal for you? So that's basically, a short information about mortgage points. There's also a lot of things that go into it and a lot more detail we can go into on that. Right. But for now, that's your basic starter package for what mortgage points are and how you can use them.
So if you have any more questions about points or want to figure out how to get the pre-approval process started or just talk to a mortgage advisor and get some questions answered, feel free to let us know. We're always here to help.
Don't forget to like and subscribe.